Welcome to this edition of Weeds World. My name is Jeremy Weeds, your local realtor right here in the Southeast. I'm joined by Lisa Gryba. How are you doing today?
Good. Thank you for asking.
Good. You are the mortgage professional. Why don't you tell us a little bit about interest rates? Because I think it's got a little people a little bit worried now, right?
Yeah, totally. So the interest rates, what we've seen this week, yesterday, the Bank of Canada went up by 50 basis points or 0.5%. So part of that, what happens then is the Bank of Canada will increase the rate. And so now our prime rate goes up. So anybody in a variable rate mortgage, your interest rates will be affected if they haven't already. So what you can expect is the payments. So basically how we guide our clients is we say on the variable side, your payments will stay the same until what your payment is that you're making is not covering the interest. The lender will send you usually a letter or something advising you that what's happening is you're not paying enough on your mortgage. So we need to increase your payments on your mortgage. Now, the key is how many more times are we going to see these increases? Nobody has a crystal ball. We all don't know definitively, but what we can say is we expect the Bank of Canada to bump one more time, a little bit. We don't expect it to be quite a jump like this last one was. But this is why we tell people to get pre-approved, right?
Absolutely.
So what we're seeing today in the real estate world is we're seeing offers are being made, and we see that there's contingencies, right? That we can put subject to financing sometimes, and that we can put subject to the sale of your house. But what we want to do is we don't want to waste our realtor's time. We don't want to waste your time. We don't want to waste anyone's time. We want you to get pre-approved because this interest rate. So when we send clients in for a pre-approval, those rate holds can be good for 30 days, 60 days, 90 days, up to 120 days, dependent on the lender we're dealing with.
That's good because especially if they're expecting to go up, and that's just, you want to be able to be locked in at a better rate, and this is the time to do it.
Totally. We see tons of savings when we pre-approve someone and we go, okay, well, look, had we not done this and your rate would have been this, this is how much more interest you would have paid over your 5-year term or 3-year term or whatever it is. So what we're seeing with a lot of clients is the strategy today is a lot of them are, we're either locking in for 5 years, or some of them we're locking in for the 3 or the 4 years, because what we expect and what the professionals are saying is we can expect interest rates to go up continually a little bit, just a bit in 2022. And then into 2023, and then we're going to settle in 2024.
Okay.
So we're not going to see this continuously over the next 10 years or anything.
Right.
We're dealing with inflation. They say this is a direct effect to inflation and inflation from the past.
Right.
So we're just trying to catch up.
Yeah.
Yeah.
Yeah. Well, and even this last hike that we had yesterday, they were expecting to go up to 75 basis points, and it only went 50. So that's a good sign, right?
Yeah. So one of the things that I took from our conference in Vancouver, just that we came back from last week, was how the government is trying to overshoot a little bit on the interest rates. We feel that a bit in our industry, right? We feel like, where are we going with this? And it feels like it's getting so high, and how high is too high,
Yeah.
So we're in a minor recession. They say it's a minor recession, and we're just trying to get a grip of it, right?
Yeah.
So, we thought 75 basis points. We only went up 50. We expect a little bit more to come, but I don't see that continuing throughout the years to come. That's what we're hoping. So anybody in a variable rate mortgage, know that you don't just deal with your mortgage and put the paperwork away. You need to look at your paperwork. You need to plan. We know you're going to want to buy, sell, renovate, do what you want to do. Don't be reacting to what the economy has done. Be proactive. Look at your paperwork. Figure out what's going on. Ask a professional, right?
Absolutely.
Yeah.
The more knowledge you have, the better decisions you can make.
Yeah,
right?
Totally.
So, and now is actually not a bad time because they're worried about, I was just going to keep going. Well, this is actually probably a good time to buy because now it's kind of slowing down and settling the rates. And
it's a great time to buy, right? I feel it's it's the best time ever. And part of it would be, as someone who analyzes risk daily, I would say to you, you know what, it's a great time to buy. Why? Because you can actually go and buy a house within the range of what it's listed for. We're not going way over, we're not going way under. If it's priced right, we're kind of in that range. The other thing is we can list our home, we can sell for what we feel is fair. We're not selling for way more or way less.
Yeah.
It's fair. We can put contingencies on our offers to protect everybody involved. And, you know, the rates are higher than what they were, but they're not so high that it feels unaffordable. It's still a very good time to purchase a home.
Yeah, and you're not overpaying, like you mentioned,
Yeah.
right? So there's a lot of good that
Yeah.
is actually from this rates going up, and like I said, just a little bit this time instead. Right?
Yeah, yeah, and
So-
it's a great time for you to just look at maybe doing a 3-year fixed. What would the payment be versus a 4-year versus a 5-year? You know, variable can be okay too, because variable, statistically, over the life of your mortgage, a variable product is fantastic. But what I say to my clients is a variable rate is only good when you know what product it is, what kind of discount are you getting, and you have to, the risk of it is you need to be able to ride the wave of it coming up and down. And unfortunately, we're going here now, right? We're coming up. So it's still, the variable can be still better than what the fixed rates are offering. But you have to be educated, you have to know, and you can't panic.
Education is key, right?
Yeah. Yeah. Perfect.
Awesome. Anything else we need to cover today?
No, I think what you want to do is you want to get pre-approved before you go out and list your home or actually
100%.
look for houses. Get pre-approved, understand how long your rate is good for, and discuss the different products available for you.
Absolutely, I think so.
Perfect.
So thank you for joining this edition of Weens World. My name is Jeremy Weens. Once again, your local realtor, joined by Lisa Gryba. One link right here in Steinbach. Any mortgage questions? I'll put her information down below. Make sure you reach out to her. Any real estate questions? I'd love to help you out. Have a
Thank
good
you.
day.